In the past 3 years, as I mentioned, we have seen from 2008 how the world economy has undergone the turmoil, and as a result of which the financial security of the individuals and the stability of the financial systems across the country were compromised by cross-border integration of systems and the resulting economic slowdown. No country has been immune to the contagion from the fallout of the global financial crisis. There was a recession in the developed world, which appears to be resurfacing after a brief spell of recovery, which I described as fragile, halting, and hesitant, and weakening of the short-term growth prospects in the developing and emerging market, including India. Prior to the crisis of 2008, India was registering a healthy growth in 3 consecutive years, 2006-7, 7-8, 8-9, 2005-6, 6-7, 7-8. More than 9% GDP growth. And because of the crisis, despite injecting substantial fiscal expansion in the form of stimulus package to the extent of 3% of GDP, in absolute terms about 1,86,000 crores of rupees, our GDP growth came down in 2008-9 to 6.6%. Again, we made efforts, and it was possible for us, taking the risk of substantial fiscal expansion, followed by 2 years, high inflationary pressure almost perilously close to the double-digit figure. It was possible for the economy to recover at the pace of 8.4% in 2 consecutive years. It was also possible to achieve the path of fiscal consolidation, which we actually achieved in 2007-8 by reducing the fiscal deficit to 3% of GDP, and again which it went up to 6.6% in 2008-9 by various measures, and with the cooperation of all stakeholders, it was possible to bring it down to 4.7% in 2009-10-11. But again, as for the current year's figure are known to you, GDP is likely to grow as per the report of the Central Statistical Organizations for the year 6.9%, and fiscal deficit, which I have projected in the budget, it is 5.9%, likely to come down to 5.1% for the year 2012-13. These figures I am quoting only to point out the magnitude of the problem with which we are to tackle with in the coming months. There was not only recession in the developed world, as I mentioned, emerging economies also suffered badly. Very few countries are having growth more than 6%. Very few, literally. It dislocated the level in many sectors of the economy, creating financial hardship, leading to unemployment. There is a growing body of the theoretical and empirical literature on the close relationship between financial and economic development. Financial system intermediate between savers and investors, enabling efficient allocation of capital and risk to support economic development. However, since the global development, particularly global meltdown in 2008, it demonstrated that we should not lose sight of the final objective of finance. Their developments highlighted the importance of understanding and regulating the financial markets and the innovative financial products in the interest of sustaining growth with stability and financial security. The success of the Indian banking system, while in most developed countries the banking system came collapse and government had to come out to protect the banking system, India was exception. Perhaps because of the cautious approach which the Indian banking system adopted, not to be tempted by the so-called market forces to run after the toxic assets